Alright, so in this video, we're going to be going over order blocks, what they are, what they mean, and how to spot them. What an order block is pretty much it's a movement in the market that causes a shift in price action and it respects that movement, uh, making it a order block because it blocks price from going past that movement that made the order block. Um, that's a simplified version of it. What it looks like, let's see, I'll draw it out for you. So we have a high made right here. We have a new low made right here. We have a high made right here, and then a low made right here, right? So this area right here is our order block. Another example would be, let's say we have price moving, right? We make this high, we make this low, right? But it respects the movement right here that made that new high, and then goes up higher, bam, order block. Um, Now let's show you how to see them in the market. So, right here is a pretty decent example of an order block. We have this high right here, right? We have this low right here, right? And then we see that price closes above this low right here with these two candles, making that a what? A bullish order block. And we see price respects it twice before it gets invalidated. Well, actually three times, because once it taps back down into right here, it wicks all the way back up right here, into this bearish order block, causing it to go down. So we see right here, bum 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 bum. We have our movement up, our movement down, our movement up, our movement down, our movement up, and our movement down. This movement up right here, these two series of candles, makes the order block that gets respected. Um, Order blocks are gonna lie near where liquidity is. I don't pay too much attention to them just because they're not part of my trade plan, but they are a good confluence because it holds judgment in how price moves. So it's definitely a good thing to look out for, no doubt in my mind. That's why I'm teaching you it. So let's find another example. Um, Boom, 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 boom. We have our move up, move down, move up, move down, move up. Right here, this candle is what? Our order block. Um, this is going to be a shorter video if I'm being honest, rather compared to our fair value gaps video, just because they are not a hard confluence to really understand. So take notes to really understand what's going on here with order blocks. Let's give you an example of a bearish or a bullish one, sorry. So we use bullish movements to mark out bearish order blocks, and we use bearish movements to mark out bullish order blocks. That might sound a little bit confusing, but that's how order blocks work, because that movement that creates that imbalance is what price is going to respect, and when it makes that bullish movement up, that creates a bearish order block. So right here we have another bearish order block, even though we're looking at bullish candles. This would be our bearish order block right here, and we see it gets respected until it gets invalidated. But even once it gets invalidated, it makes a new bearish order block right here. So let's show you a bullish order block. Uh, do, 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 do. Let's see. So we have a small one right here. We have this move down, move up, move down, move up, respected order block, move up. So right here is going to be our order block. until it gets invalidated right here. Even then, we see another order block form right here, and we see it gets respected and then invalidated right there. Let's show you another order block. We see move down, move up, move down, move up, move down, move up, and then once it continued moving up, that's how we know this is a order block right here. And then we see it gets invalidated right there. Let's show you another example. Right here we have this move up, move down, move up, move down, move down, move up. This big sequence of candles right here is going to be your order block. And we see once price retests this order block, it falls back down and makes lower lows. And what do we see within this bearish order block itself? Look at that, a bearish fair value gap right there. So let's go ahead and look at a bullish order block right here. We see this move down, move up, move down, move up, move down, move up, closes above this recent high, making this our new bullish order block, these three candles. And what do we see? Price respects these three candles until it doesn't respect it anymore. So we see this order block is formed, we retest back into it to fill the imbalance, and then bam, what happens? We make new higher highs and new higher lows until, look at that, we reach back into this bearish order block that is also respected. And that's why we don't break above it, is because up here we have a big demand of sellers in the market, and that's why that makes it a bearish order block. And right here, we have a big demand of buyers in the market, and that's what makes it a bullish order block. Let's show you another example. So yeah, it's getting a little dark in my room now, so that's why the lighting looks different. But let me show you another example of order blocks. Right here, we see these movements down right here, right? But then we see this close above this high right here. That's what makes this bearish movement down a bullish order block. So it's a little bit confusing because we're marking a bullish confluence off of a bearish movement. But as I show you more, you'll understand why. So we have these order blocks, right? It gets respected, tap back in to fill the imbalance, respected, respected. And as we see, as it goes up, we see more order blocks getting formed. Like we have another order block formed right here at these two candles. Gets respected and makes higher highs. But what do we see right here? A bearish order block. And that's what makes these lows happen, but then it gets invalidated. So let's show you another example of an order block. Let's see. So we see move down, move up, move down, move up, move down, move up. This entire movement right here is going to be our order block. And we see what happens. Price respects it. And we then make lower lows after it refills the imbalance of orders. This would be purple because it's a bearish order block, but I'm just trying to show you what an order block is really. And even then, right here within this order block, we have another one that's formed right here between these two candles. Let's show you more order blocks. So we have, bam, this movement down, movement up, movement down, movement up. What is this right here? What is this right here? Our order block, and that's why it gets respected. Let's see. Bang, right here. We have another order block form right here. So we have this movement down, which makes our bullish order block, right? And it gets respected. But what do we see right here? Another bearish order block gets formed at the same time. And bang, what happens? We see price respects these two confluences and starts trading between this range, consolidating the price, because we have a lot of buyers down here but a lot of sellers up here, and that's why price is just consolidating, going sideways like that. It's just a movement in price that causes a block from going past that range. Like right here we have move up, move down, move up, move down that respects this right here. That's what makes these three bullish candles a bearish order block. And that's why price fails to close above this, is because we're respecting this bearish order block. And this right here, this is a news candle. I don't ever trade news because of how volatile they are. But we can see that when it's in this bearish order block, that we can't go past it because these institutional traders have so many orders placed in this area. It just stops it from breaking past this range. But that's what an order block is. It's just a range that price respects. It's just another confluence that we trade off of, and it's a good confluence to know. So to show you again, let me get my marker. We have a high, a low, a high, a low. This price gets respected and makes a new higher high, right? This area right here is going to be our order block. This all right here is our order block. And then let's say we have we're in bearish movement. We have this high made right here, this new lower made right here, trade back into this area right here, and makes a new lower low, right? This now area right here is going to be our order block. It's as simple as that. And I try not to go too into like weird sounding words because I don't want it to confuse you. I just want you to be able to understand this in the most simplest terms possible, because that's what messes traders up, is that they overcomplicate it and they just confuse themselves, and that's what makes them not be able to execute. Waiting to happen. Like right here, another order block. We have movement up, movement down, movement up, movement down, movement up, movement down, respects this movement up right here, makes this a bearish order block. The heck? I don't know what just happened. A bearish order block. And some people won't even, we see price respects it like for so long, like every time it touch back into this area, it just dumped because so many orders are here. Like for, let's see, one day, Friday, Monday, second day, respects it. Tuesday, taps back in, respects it. Wednesday, taps back in, respects it. Finally, on Thursday, it taps back into it and invalidates it. And what happens when it invalidates that bearish order block? It makes a bullish order block of its own, right here, off of just this one giant candle. Bam, just like that. We have bang, 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 high, low, high, low, high, low, high, low, higher low, higher high. So that's how we know this candle is now our bullish order block. A order block isn't always going to be a series of candles. It can also be just a singular candle itself. So don't try to confuse that either. Like, order blocks are just significant ranges in the market that get respected. An order block is like kind of like a fair value gap, but it takes more to form an order block than it does to form a fair value gap. Yeah, it's a confluence. It's important to know about. And now what I want you to do is, now that you know what an order block is, go back onto your chart, take however long as you want. I recommend at least 20-30 minutes. The longer the better. and just mark out order blocks so you can see how price respects them. Because once you understand how price moves, it's like you're a freaking future teller, because you know what price is going to do once it enters that range. Like, we look at this, we have a bearish order block right here, right? And now we can expect price to reject off of this bearish order block whenever it re-enters into it. Like, we see price move down, it fills the imbalance by going back into this confluence, not once, not twice, 3 times, 4 times it respects it until it gets invalidated. So that's going to be it for order blocks. It's not as long as our other videos, but you get the idea. It's a series of movements that gets respected by forming a new high or a new low. And once that new high or new low gets formed, that order block is formed, and then we can expect price to trade back into that order block and then go off of it. So right here, just for an example, we see our, I can even just change it to the line just to show you. We see our move up, move down, move up, move down, move up, move down, then our move up right here. This movement down right here is going to be our order block, just like that. And then we can see once we get back to our candles, we see price goes back into that. Like, you don't even have to trade candles. You can strictly just trade off of the line and trade off of order blocks and break structures in liquidity sweeps, and you can be profitable. But I like to trade candles personally. I know a few people that do trade off of the lines like this and something called an RSI. Like that's how my uncle trades. He trades off of the line like this. He doesn't like to mess with the candles, but that's just because that's just what works for him. It's the most important part about trading is doing what works for you, not doing what works for somebody else. Like, yeah, I'm teaching you what works for me, but that's because what works for me is proven to work and is proven to be profitable. And that's why I'm teaching you that. So yeah, that's what an order block is. It's a movement, and then that movement is respected. And once that movement is respected, that's what makes the order block. It's not an order block until the movement is respected. So just to show you again, we have our, where's our brush? We have our high made, right? Then our low made, right? And then a higher high made, right? And then an even lower low made. And that's what makes this area right here our order block. This movement up right here, this movement up right here is our order block. And we can expect price to then come back into this order block and make an even lower low. As for a bear or a bullish order block, we have a low made, then a higher high made, and then a higher low made, and an even higher high made. And this movement right here is our order block, and we can expect price to come back down into this order block and then make it even higher high. And it's as simple as that, really. That's going to be it for order blocks. Go ahead, go to your chart now, take some time out of your day, and just mark out that confluence. And as you're seeing those order blocks, since you already learned about fair value gaps, inverse fair value gaps, mark those out as well. Because the more you mark out these confluences, the more it becomes secondhand nature to see them in the market, to help you analyze and to help you execute. That's going to be it for order blocks. I'll catch you guys in the next video.